Edition of Toggle's daily video insights. As by now you already know, my name is Jan. I'm the CEO and co-founder of Toggle, and we do these insights every day. If you'd like to see them more often, please subscribe to our YouTube channel or check us out on toggle.global, where you can also sign up for the daily brief or test drive the Toggle Copilot, the first intelligent investment dashboard. The focus today is going to be on Fresenius Medical Care, ADR. This is a company that appears to be quite oversold given the recent price action, and what Toggle is noticing using a continued monitoring of unusually large price moves up or down, that it probably has stretched too far. And so specifically what you can see in the chart here is that it assumes with the starting point of 34.10 that you would bounce up over 20% to 41.07, assuming again the historical paradigm holds within the next 6 months, where again the no-go zone or the stop loss level is 30.61. So you would presume that the price action remains inside this confidence cone, and going below this means that the odds of this paradigm still being relevant are greatly diminished. Now, what's good to see and is an interesting addition to the analysis is that you really have seen these 17 previous episodes that I mentioned earlier appear, and going all the way back to the early 2000s. So as you can see here, from time to time, and this is exactly this move relative to volatility that you're seeing currently, and you can see how stretched it is, and that historically actually these have preceded meaningful bounces in the stock. Didn't happen always, but it happened often enough that this is definitely a meaningful pattern. Again, looking through the back test, you can see that the risk reward is quite compelling. There are times when in fact the returns were substantially higher than 20%, whereas the downside was generally contained, with a few exceptions, notably one that seemed like where the stock continued to go down for another 30%. So the importance of the stop loss level here is really quite critical in managing the risks. As always, this is just the incremental update, so it behooves us to then also look and click on this to see the 360 picture of what Toggle has pulled together for this stock. So clicking on this will take you straight to this screen, where you'll be able to see that actually Toggle has started noticing, both on the valuation as well as the oversold argument, quite a lot of compelling price pressures, positive price pressures for the stock from here. And as you already know, the past insights are all published here, along with the latest news on the company, as well as the metrics that you would presumably want to take a look at, such as PE and then also EPS forward growth, when you are completing your own mosaic and picture of this particular stock. Going back to the original chart, again, keep in mind that this is potentially quite a compelling risk return, but most importantly, see how it fits with your own thesis. So much for Fresenius today. In the daily brief, if you receive it, should already be in your mailbox. If not, please sign up at toggle.global. We also discussed the importance of the incoming Treasury Secretary Yellen disavowing the long-standing strong US dollar policy, and what that might mean for stocks, particularly for commodity exporters and the like. Thanks for your attention, and we'll talk to you again tomorrow.